Last week, we invalidated the breakout from a tactical head and shoulders bottom on the 30-year bond yield. TYX is the ticker for that. And you can see what happened here. You have a rising wedge. You had a tactical head and shoulders. The head and shoulders did not get to the target. Looking at this downward sloping trend line on RSI tells us that we are reasserting the rising wedge. Continued closes below the weekly moving averages, namely the 13, 26, and 40-week moving averages on TYX from this 47.57, the 48.12 level would maintain that breakdown from last week, keeping that rising wedge in focus. There's also a rising wedge as well. One of my little mantras is if you fail a head and shoulders breakout, which we did here, usually form a rising wedge. So you got another little rising wedge there. So it wouldn't surprise me one bit to see TYX trend towards 45.28, maybe even down into the 43 area. So it's roughly 4.3% on the yield. The biggest level to pay attention to on bond yields is this FVX level. It's the 5-year Treasury note yield. And it stands where we actually are on the low of the week, 35.83, so 3.58, 3%. Big level there. If you break it, guess what you do? You form a top for the yield and a base for the 5-year T-note. So we're going to keep an eye on that. Right now, it's not happening. We're defending that long-term uptrend line that goes back to the low of May 2023. Good news is you're getting a breakout for convertible bonds from what looks like a cup and handle with a couple sloppy looking candles, but a cup and handle nonetheless. This should reassert the upside potential to 101 spot 25, which is a massive cup and handle target. That pattern was completed on the move of 82. This current cup and handle, if we just put a trend line or an arrow on it, would suggest maybe a little bit more upside than the 101.25 level. But this is tilting positive. It's positive as long as you stay above 92.30 to 91.12, which are the rising 13 to 26 week moving averages.